Welcome to Trader TV. I'm Dan Barnes. Joining me today is Ken Monahan, Vice President for Market Structure and Technology at Greenwich Associates. And we're going to be talking about the rates markets, specifically electronic trading in the US Treasuries market and the European government bond markets. Ken, welcome to Trader TV.
Thanks for having me.
So tell us, how are US Treasury markets looking at the moment relative to previous months and also previous Augusts?
August is historically kind of a slow month. Interestingly, July was so slow that this month is actually a slight uptick from last. It's about in line with previous August, which is a little surprising considering there are very large. And of course, also Powell spoke this morning, so who knows what the answer to this will be tomorrow.
Yeah.
Kind of a major shift in Fed policy today. But yeah, it's kind of in line with previous August. I mean, the structure of the Treasury issuance, the structure of the Treasury market, and the way in which different parts of it interact, these are all significantly different than they were. But in terms of overall volume levels, it's not too distinct.
And then how's e-trading been as a proportion of the market relative to voice and also within different segments, so D2C and D2D?
During the acute phase of the COVID crisis, back in late Feb, early March, we actually saw a decline in e-trading. But what we found across the Treasury platform space is that the levels of e-trading have increased since then. E-trading as a proportion overall has sort of returned to the normal trajectory. What's interesting is the mix of that. Now, one of the difficulties is sort of a lot of the single dealer platforms, a lot of the sort of direct streams from the dealers to their clients are not reported. I don't know if you saw, there was a report out from JP Morgan that said that there was a lot of uptake from their clients of direct streams in recent weeks, and that's very interesting. I think the reliance of customers on electronic trading, that is increasing. The most interesting thing is that the interdealer markets, right, and also the futures markets have actually declined a bit in their volumes. So I don't know if this is widely known, but historically, futures markets have been about the same size as the cash markets in US Treasuries, right? And this is not the case really in almost any other asset class, right? So in FX, FX futures are a relatively small proportion of the cash markets. But in Treasuries, the futures market, and again, the futures market is organized on a central limit order book, which is a much different protocol than the vast majority of dealer to client trading is done in cash Treasuries, right? And interestingly, the central limit order books for cash Treasuries, where the dealers source their own liquidity, a lot of the liquidity in that market is the result of arbitrage between the cash and the futures markets. Arbitrage relies on a number of things, one of which is the margins required at the futures exchange. Another is the cash futures basis, which is funded in repo markets. And what happened in the acute phase during the period when there was this massive rush for cash on the part of corporates around the world looking to shore up their balance sheets to ride out the COVID work stoppages was that repo markets got extremely tight, right? And it actually had the effect of breaking or making very difficult the execution of that arbitrage trade that linked the cash and the futures. And then also, because there were these giant moves, the futures exchanges raised their margin requirements because, of course, the variance of the asset had spiked, right?
Yeah.
And of course, it takes a while for those data points to fall out of the sample and for the margins to return to normal. That trade is usually levered quite a lot. And so when you have a bunch of outlier events, your willingness to lever that trade goes away. And so there's a weakened link between the cash and the futures markets. And that's sort of what you see when you see the reduced volumes in the central limit order books in cash. The cost of financing the trade, the reliability of the trade, the amount of leverage in the trade, right? All those things have changed as a result of, actual full on, market activity, right? And that, that's persistent.
Do you have a view on how much e-trading is going on in non-US government bond markets right now and whether that's increasing or declining?
I think it's generally increasing. I mean, there's a lot of interesting stories there, right? So the LSEG Refinitiv merger has, a number of implications for that. And, that's a big story. The fact they're going to probably divest Borsa Italiana because it controls MTS. The way the European rates markets are structured is quite different, right? First of all, there isn't really a substitute. There's no parallel for the treasury market, right? It's, it's the risk-free asset in the world's reserve currency, right? So it has a lot of features that are not present elsewhere. In Europe, you have a very interesting feature where all of the governments are different and the credit ratings of those sovereigns vary quite widely. And no single market is that large. And the interesting thing about Europe is how big the futures markets are relative to cash, right? So there, the Bund futures market sort of performs the function of the treasury market and to some extent the function of the Eurodollar futures market in the US as a sort of rates hedging. So there, in the cash bonds, you don't see as much, electronification per se, but that's masked to a large degree by the fact that the Bund futures markets, which are electronic, right, trade, vastly more than any individual sovereign bond market within Europe. I think the European governments would like to see an increase in electronic trading. It's, they like the efficiency of it. And I think the fact that you're going to have persistent competition between TradeWeb, Bloomberg, and MTS, right, that'll probably push innovation over there. But it's always important to remember the Bund futures market when thinking about, European rates electronification.
Ken, thanks very much.
My pleasure. Thanks for having me.
I'd like to thank Ken for his insights today, and of course you for watching. To catch up on our other shows, go to tradietv.net or etftv.net.